Hey traders, so today I'm gonna teach you guys about support and resistance. So let me ask you one thing. Have you ever looked at the chart and then think, what is this random stuff of lines going up and down? But have you ever thought there is a hidden structure, a map of where you can see battles between buyers and sellers who are trying to find some kind of control? So this is what they call as support and resistance. So today in this video I'll show you step by step how to find these levels, how to draw them, how to build actual proper trading strategies, and then use this as a confluence for other parts so that you can build one whole system that it's easier for you to understand and easier for you to see. So let me first just draw and explain what is support and resistance. So think of it as like this. When you're standing, what is below you is the floor and what is above you is the ceiling. So when price is going up and down, it tends to bounce between these levels, not exactly at a specific line, but we call it as zones. So price can go up, retrace, come here and then drop, and then maybe retrace, drop a bit further. There's so much of variations of what can happen in the market, but we try to dumb it down and call it as support and resistance because these are the levels that buyers and sellers are trying to fight to see who is in control. So the ceiling is what they call as resistance, and then the floor is what they call as support. Okay, support. So what now we need to know is that it's not a specific price or specific line or specific point. It's a collective zone, we call it. So at that level, why it happens is because of what we call as human memory, where those buyers who have bought at this level previously and some of them who have missed those levels that it went up, they will think that when the price comes back to the support, I will be a buyer. So when a lot of people have the same type of thinking, then it creates a influx of buyers at support and influx of sellers at the resistance. So they will have this thing where, okay, whenever the price comes here, I'm a seller. If it breaks beyond, then I'm not going to trade. But if it rejects at the resistance, I'll be a seller. I'll put my stop loss above. Same thing for buyers. They feel that when the price comes down, it's not very impulsive break towards the support, I'll be a seller, I'll be a buyer. And then their take profit will be at resistance. For sellers, their take profit will be at support. So it's basically like this. So they will predefine their risk, saying that okay, I'm going to be a buyer and my stop loss is maybe, let's say they put this much and then take profit here. And then for sell position is the same thing. Sell position, you put your stop loss above and take profit at this point. So these are the things. A buyer can be a seller at resistance and buyer at the support back. So it's just bouncing up and down. So let's look at some of an example. So here it's easy to see because you don't have to look for any kinds of patterns, nothing. You just look for market that is going sideways. So let's try to focus in this area. Okay, so this area specifically. So let me just keep it like this. Okay, so now this is in weekly chart, so it takes a long time to establish this. See, if this is from January 2023 and it all ended at what, 2025 March. So this is a long time. So first we look at those levels, what's happening. This is 2, okay, 4 hours is great. Okay, so first we try to look for, this is the low and this is the high. The high is not progressing higher significantly, and the lows you can see is around the same area, and after that it didn't break this level. And let's extend it here. So you see, those people who bought here, price went up, came back to the same point, and you see, if there is a lot of sellers, they would have easily broken this, but you see there is a struggle. Buyers tried to push, sellers came in. Buyers tried to push, sellers came in impulsively, and then they lost, and buyers pulled it up back to the resistance. Same thing. Buyers tried to push higher, failed. Buyers try to push, fail. Buyer tries to push, fail, and then drops back to the around that support area, and then tried again. And then now it did manage, but then eventually it created a bit higher resistance. So that's why I say, if you look at it as a specific line, then you might think that this is an uptrend, you'll be buying at this point, and then market comes down to the support. And same thing here, you see, fight between buyers and sellers. So this is one example. So let's maybe look at another example. Let's look at weekly chart, easier to see. This one. So this is the support and this is the resistance. First time buyers brought it up, buyers defended, and then this one it broke out and really rallied, go up. So this is like a small uptrend, and then it dropped back again in that same range. But since this is in a weekly chart, so this can be considered as a small short-term uptrend, and then it failed to go up even more and then drop back again. Okay, so this is one of that. So let's maybe look at some volatile pairs. GBP to NZD. GBP, because I have traded back in 2018 2019. So this one, you see, this is a very long range, so we can say maybe the collective resistance and collective support is here. So you see, same thing, the struggle between buyers and sellers, not knowing where to push the price. So it's been just going up here, down, drop. So this is a very good place to be entering the market, to be just playing around in this bounce area. And then after this it broke and then it started trending higher. So that is one. This is one example. Let's say GBP. Let's look at GBP AUD. GBP AUD. Yeah, this one is there is a small range here, but this is, you can see the range is not like a straight line, it's like a trend line, but still the same thing, support and resistance. It's just been bouncing around this level until it break, and then it started to trend. So when I taught you in the previous video about how to identify trends, so this is the opposite. This is how to identify stagnant ranging market and how to take opportunities in this kind of market. So when the price comes to the support or resistance, don't immediately buy or sell. Look for the struggling point, like in Euro USD just now, when I showed this part in a lower time frame. You see, the market doesn't suddenly just reverse this point. See, when the price comes to the support, it is struggling to see. There is ample of time to take entries. Let's say the first one came here. A lot of people maybe would have rushed in and take trades at the top, and then experience this, hit their stop loss, and then start to go up. So we don't want that. We let it to establish first, and then maybe take a trade somewhere around here or here. Same thing like this. See, at this point support, market came here and then go up, drop back, go up, drop back, go up, drop back. Gave so much of time for you to enter and make money. Same thing at resistance. Don't immediately sell. Wait for the first push and then retrace, and then you can buy and you can sell. So this is one tip for you. And how to actually practice this, try to look at it as zones. Separate the thinking that you're not looking at an exact point. Don't see it as like, oh, this didn't hit another 10 pips, this is not the zone. Look at it as like a big zone where these are the areas where a lot of sellers are present and they can push anytime. Okay, and look, the more touches there is, the more better, because that's where a lot of struggles between buyers and sellers are happening. If you just look at one point and it didn't reach there before, that's not a proper resistance or support. Like this is a proper place where you can see struggle between buyers and sellers. Okay, and maybe let's look at one last one, GBP CAD. Maybe let's say daily chart. Okay, this one is here. Let's look at weekly. Yeah, this one, there is two, here one and here one. This is a very choppy kind of range market, but you get the point. It's not an exact point, it's the zone, something like this, and something like this. So you see, when it broke out, it really did go down. Since this weekly chart, this is really trending down and like really went to the bottom, and then it came back up and still managed to come here and fight, and now it's slowly trending higher. Same thing here. This is a very nice range market where you see market is fighting in these levels only, up down up down up down, until it's broke and then it started trending up. So this is where you can see your higher high and higher low. When you do your higher high and higher low here, it will be, you see, this is your low, this is your high, higher low. It didn't create higher high, it created lower high, and then you see it doesn't work in this scenario. But in this point it did work. In a smaller time frame, this will be something like, see, now we are looking at here is like this, but in a smaller time frame, maybe 4 hours, this will be in there like that. So this is where you can mark those levels like low, high, higher low, higher high, and then you can take your entries here like that. Put your stop loss and then ride the trend until it reaches to this point. See, here is a small range market, resistance, support. It was bouncing around this level, broke, same bouncing, and then see, this is one huge retracement and then continue higher, retracement, impulsive, retracement, impulsive, and then started the downtrend because it failed to create a new higher high, created a lower low, and then you could have sold here and ride the trend. So this is one part. The next part is something called as the support become resistance and resistance become support. So what I mean by that is, I can show you example here in this one. Okay, maybe go to, we just put here to here, and we go to a lower time frame. So this is an example I want to show. So we see this is our resistance and this is our support, and you see once broken, our support became the next resistance and this was the support. So you see, your support becomes the next resistance. So when in a trending market, we will see this more often, where, let me show you something like this. When in the trending market, you'll see market go up, down, up, down, up, down. So this is your initial support, this is your resistance, and then this is your support, this is your resistance, and you see it overlaps. Your previous resistance become the next support, and then it does the same thing. So this is what they call as the role reversal, where your support becomes resistance, resistance becomes support as the market goes, until to the point where market doesn't have the momentum and it starts to range and then drop, and then same thing, initial this resistance, support, it will become the next resistance, and then does like this, depending on how spread out is the buyers and sellers. Maybe it'll drop after few touches, but like I mentioned, the more touches the better. Okay, so how to take a trade based on this? Taking a trade based on this is simple. We always want to test out few things. When the market is coming the first time, don't take a trade. Take a trade when the market is established, and like I said, look for the point where you know it has touched 1-2 times and then it comes back again, you can take. Don't look at things like this. Let's say this is your support and this is your resistance, and let's say market is just going up like this, going up, and then let's say it rejected like this, and then it came up slowly and then it dropped. Then you can take your sell position here and maybe put your stop, take profit to this point. But what if suddenly at the support you immediately buy and then the next candle is like this? This is showing you that the sellers are in control. Does this look like the sellers are in control? No, but this one, it is showing that one party is taking control. So most of the time this one will come back up like this and then start to continue the trend. Sometimes it can happen like this. This is called as a fake out, where there's a lot of liquidity here, they drop and then immediately they came back up to this point, and then this one will continue higher to the resistance. So it's very rare to see this like this every single time. Most of the time, if it hits once or twice, you will see a continuation of price going down like that. So whatever I say, don't take it blindly. Go and do your own proper back testing. Look at different kinds of charts and see how those support and resistance work, and then you will get an idea of, okay, maybe for GBP JPY, when the price reaches to the resistance, you need to wait a long time before you can take your entry. Or maybe let's say you go to GBP USD and you feel that at resistance you can immediately take the trade because the response is very quick or something like that, depending on what you are using and how you're trading. So another advanced way that I won't share too much because it's quite complicated to use so much of things is look at the volume. So this is a volume indicator. You can use this, check here, volume. So here it's showing you what is the current volume. So when you're seeing a very high volume on those resistance breakout, that means that it is a very strong move and it's a real move. But sometimes you will see this kind of things like a fake out. That means that it's usually not gonna go in your direction. It's gonna maybe turn back, or like what I mentioned just now, like those candles come here and then immediately come up back. So this kind of moves you might want to avoid. So to recap, support and resistance are just the floor and the ceiling. Basically, we just find them by looking multiple price rejection, how many times it rejected, and what is the volume and how it's reacting at the support and how it's reacting at the resistance. So this way you will have multiple tools to look at the chart and try to study why it's happening like that and how to make use of it completely. So if you all understand, let me know down in the comments what you think, and maybe you guys can share some ideas of what you think of support and resistance, and I will see you in the next video. Thank you so much.